Morning, Steve Ray in Chicago with the morning grain comments. Everything in the grains were a little bit lower overnight. We've seen beans and wheat rally to unchanged, but corn is still lower. Outside markets, the stock market was lower, kind of coming back a little bit. The dollar's higher, and now crude's also higher. So the markets are kind of trading between, I guess, a range, trying to wait for news, number one, about any trade issues with U.S. and China. And in the grains, we're trying to get a handle on the size of the U.S. crop and how harvest is moving along and how do the yields come out. And then basically what's the demand for our U.S. supply. Tuesday is usually numbers day. Because of the holiday on Monday, we got all the numbers yesterday. So kind of going over them. Number one is corn harvest is 22% done versus 36 average. And the crop dropped 1 percentage point, 55% good to excellent versus 60 a year ago. We saw crops decline in Illinois, Minnesota, Michigan, and Nebraska. As far as bean harvest, 26% done versus 49 average. Soybeans crops actually improved 1 percentage point to 54% good to excellent versus 66 a year ago. We were up mostly in Michigan and in the southern Delta areas. Winter wheat planting, 65% done. That's close to normal. And we still have 6% of the spring wheat crop that needs to be harvested. We also note that yesterday, weekly wheat exports were running 21% ahead of a year ago. USDA is forecasting 1% increase. Corn is 64% behind a year ago. USDA is looking for only an 8% drop. And the beans are 7% ahead of a year ago, and USDA is looking for a 2% increase. Crush data, very disappointing yesterday. NOPA, which does about 95% of the crush, was only 152 million bushels. This was down sharply from 168 crushed in August and 161 crushed a year ago. So maybe lower margins might be reducing crush, and also farmers not selling a lot of beans. As far as big picture news, the Chinese want to buy more U.S. products, but their questions remain on the time frame, and also Beijing is pushing for U.S. to drop a plan to impose new 15% tariffs on $156 billion of Chinese goods starting December 15th. We also noted that the House passed a resolution supporting the Hong Kong protesters overnight. The Chinese said that they would retaliate if all of Congress passes that type of measure. We also note that South American weather is improving with rains in Brazil and also steady and normal rains in Argentina. Here in the U.S., the GFS model shows northern half of the Corn Belt later in October could see a heavy rain and possible snow event. And so we'll kind of have to watch that closely with things running behind normal as far as harvest goes, how much work gets done before that event. The funds, yesterday, sellers of wheat, corn, beans, meal, bought a little oil. And we estimate now that they're short 18,000 Chicago wheat, 113,000 corn, and long 36,000 beans. So we're going to have to be watching news about the trade deal. We have to be watching global weather conditions, especially here in the United States for harvest. And we're going to have to be watching the money flow and see, talk of global recession, talk of lower interest rates here in the U.S. or not, and talk of unrest in the Middle East and how it might impact equity and commodity prices. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.